Audio morning brief for the U.S. grain markets. It's 8:26 a.m. Eastern Time, October 20th. I'm Rich Paz for Critical Point. Okay, overnight the market did poke through the prior upside objectives, and now it's backed off and almost setting right at that 505 area there that stopped the market yesterday to perfection, and it was a critical point upside objective. Now, we still have the potential to rally to 511, 514, 15, 518, 519, something like that. However, the model is warning we've met all the requirements for level 3 top. It's just a matter of time. It may put in more than the normal requirements, and it may linger. So this market can move higher into next week, pull back next week into a level 3 bottom. But the point is, it can top today. It's met everything, and I think if it closes lower today, you should consider it's just going to be lower next week, okay? But it may just be a level 4 pullback today, and Monday we find they put it right up again, all right? Can't tell for sure. As I look at the daily indicator, it's overbought, but nothing extreme, and it's acting quite bullish. The 532 slow daily stochastic, wide enough spread. It's saying lingering near-term upside momentum next 1 to 3 days. Well, then that means higher next week. So the technical side is saying favor this thing topping late, okay? That'll top next week and pull back. And the longer it takes to top, the less amount of time to decline, which may also reduce the amount of decline next week, and that's just fine. The model likes that because it just fits inside those larger uptrends, perhaps into early November for corn. So this is all bullish and very constructive, and I got a feeling next week we'll find the market won't pull back that much, but it could pull back all the way to 490 on the December, okay? Probably not any lower, and it may only pull back a nickel and stall out. It may only pull back a couple of days. A lot of little things going on. So anyways, it still looks quite bullish. And the technical side isn't really saying, look for a top now. It's just saying prepare to look for a top. And the indicator is just saying, though, it can top today. So, we'll just have to see how it closes. And we may have to backpedal and start over next week that it goes a little higher. But looking out the next week, corn ought to back off some. But again, all of this tucks in a larger uptrend. Not to just into the end of the month, more likely up into early November, I think, okay? All right, and I still believe the bottom in September was anything from short-term all the way to long-term, and I just think that's going to move higher into next year, and I think some of the chit-chat in the last 24, 48 hours has flipped to that possibility that we have a seasonal up move into summer. Somebody changed their attitude here and woke up, and so I like that. All right, news-wise, though, I don't really have much going on here other than, watching demand from China, watching Brazil weather, and at least the ethanol might be a little supportive here to corn. Now, for the soybeans, off a little overnight, testing the 5-day average, and it is overbought, okay, yeah, nearly extremely overbought, and the model saying start looking for a top Monday. And it may not top out to the end of next week. And it's also due for level 3 bottom next week that could spill over into the following week. And so I think there's still going to be some selling next week. But it's looking as though it ought to at least pop a little bit more going into early next week. It looks as though the market, let me double check on the level 4s here. It could place a level 4 bottom later today, but unfortunately it doesn't have to place it to Monday, so I don't know. Is it going to be a down day or up day? Now, for the moment, it's working as a down day, and I realize whenever we're looking for level 3 tops, once we get in that time frame, that we assume a down day is probably the sign of a top if we cannot get off the fence and actually time it, call it, all right? But if it's going to close lower today, it's not really in the time frame. It is possible it tops earlier than it's supposed to, and we miss it. But I guess I'm going to lean towards I'm not going to feel all that bearish about a down day. I would become concerned if it trades below yesterday's low at 13.17.5, and more so if it's a close below that level. We probably got a level 3 top in. So I think a wave of selling is coming next week, but in theory, they're going to bounce beans at the start of next week. and then they'll sell them. Okay. Now we have the outstanding targets at around 1356, 1366, 67, 1377. I think that's too high for this level 3. I don't think it's going to do it. And I think it met our minimum prior upside target of 1330, so the model gets a gold star price-wise. Now we just have to see, will it poke a little higher into next week and then down, and then the model will get a gold star timing-wise, okay? But anyways, from 1330 to 1345, 46 is the prior range and the best range to use for now. I think those higher objectives in the 1350s to 1370s are out of line here, but I think that's a future level 3 upside objective down the road a ways further out, because I think beans have bottomed long term. That one could change though going into early next year according to whatever Brazil produces. Or whether we lose the economy. And there is some concerns this morning by myself and the stock market. I'm going to do a special morning brief here of concerns of where we're going financially. But overall, I think this looks good that probably beans are going higher in November. And I don't know, is it going to be a struggle? Is it going to be just a little bit higher? Is it going to be quite a bit higher? Don't know yet. But I think we found some significant bottoms in soybeans, and the chatter in the last 24, 48 hours has flipped in support of what my modeling suggests. So I think there's a little more upside here in the beans yet, but I think they're going to sell them next week. And the same thing for corn, that maybe it tops now a little ahead of beans. Maybe it bounces one last time in early next week, be in line with beans, and then I think it's going to go down, okay? So I think we'll see a wave of selling next week, but I can see some lingering strength a little bit. And the selling next week really shouldn't destroy anything. I think we probably have higher later this year. All right, now let's move to the December Chicago. And I don't have much for downside targets. I gave you yesterday's low to watch out that might be negative, and then we'll generate some downside targets, but it should be just a retracement. All right, the wheat market is up this morning. I like it. And the model's now more aggressive here, saying, yes, it can top for level 3, but the model actually prefers early next week is the better time for level 3 top. And it just touched our minimum upside objective, so the model gets a gold star. And if it were to turn down today, the model probably will say, okay, level 3 top. And if a few days later it's still down or having some problems, it'll get a gold star for timing. But right at the moment, it doesn't really want to time here. It doesn't want to get that close to the high. It'd rather wait to see someone else sell first, and is suggesting maybe a bit higher early next week. But next week, just like the corn and soybeans, it's due to sell off. Okay, so for some reason, they're going to want to sell all 3 of them. And it might be on the commercial side, a product flowing through the pipeline and the farmer, but it might be more of the fund. Okay, and I don't know yet, and I don't care. It just looks like it's going to add up. Somebody's going to sell something. All right, now for the wheat, however, even though it's met the minimum objective here as of this morning to go into 592, we have objectives as high as 614 for the wheat going into next week. It is overbought and approaching extreme overbought, but it has a widening spread as of this morning, suggesting chance for lingering near-term upside momentum next 1 to 3 days, and I'm fine with that. But it is overbought, so it is warning. We have a right to start looking for a top, that the model can be right, that this market's going to top sometime next week and back off next week into a level 3 bottom. All right, that's all I've got for you this morning. The soybeans could, if the stock market goes considerably lower here in coming days, you may see some of the hedge funds, macro economy type hedge funds, actually sell some beans. I think that's a minor issue. I think these commodities have solid enough demand. They're not going to get worried about watching the news on the financial side on a short-term basis, that it would be further down the road that we have some issues to deal with that might bother these commodities. To me, it's more like a limiting a headwind, if you will, in terms of how high. Right at the moment, I think the commodities are in their own microeconomics, and I think it's looking strong here. Past results are not necessarily indicative of future results, and also keep an eye on the dollar, by the way. Have a great weekend. Thank you.